Hello everybody, welcome. Today I'm going to walk you through a quick video that's going to document some of the features of preferred shares. And this is going to be specific to Canada, and we do see some popularity of preferred shares in Canada, especially amongst retail investors sometimes who are trying to enhance the yield they may require, and some positive income generation tools that sometimes have tax advantages here in Canada. So we're going to walk through just a quick 10-minute video of some of the attributes of preferred shares, why companies issue them, why investors buy them, and really some of the differences that we have compared to common shares. So the first slide here, really, why are they called preferred shares, right? We have common shares. Everybody's somewhat familiar, I think, with what common shares are. But now we have a different classification of shares. These are called preferred shares. And so why are they different? Well, number one, I have on here, our dividends must be paid before common share dividends. So here, preferred, well, they're called preferred because the dividends that are going to be distributed by the company must first satisfy what their obligations are to preferred shareholders before they go and pay common share dividends. So that's one reason why they're referred to as preferred shares. The second main point here is that in case of business failure, so let's say a firm gets in trouble, preferred shares rank ahead of common shareholders. So this is the second feature we see why the name preferred comes into play, because they have a preferred stance in terms of the liquidation of the assets before common shares. But they still, remember, preferred shares, they still rank behind debt, okay, or other fixed income instruments. They still rank behind debt. They don't have the same status as debt. A lot of times we refer to as preferred shares some sort of hybrid, right? They're in between fixed income. They're in between full common share equity. They have some different attributes within there. Another key thing to remember here, I'll just put another bullet point down here, is that there's actually not a contractual obligation to pay dividends. Okay, so there's still no contractual obligation to pay dividends. Okay, so by chance, if the firm decides to say, hey, we're not going to pay dividends to preferred shareholders, that's going to be an issue for a preferred shareholder. Now, there's different types of features within preferreds that, these missed dividend payments may accumulate and must be paid out at some point in time. That's a cumulative feature, but there's still no contractual obligation here. This is in contrast to what we see with fixed income. If we have a fixed income or debt instrument, it's a contractual obligation that, the issuer of this debt must pay out a certain portion of interest at fixed amounts over time, and then must repay that principal at some point in time in the future. So those are some features of why they're called preferred. There's some other features that we're going to talk about here going forward, but that's a general sense of why they're called preferreds and some of the differences we see between common shares and debt or fixed income. In the second slide here, we're going to go a little bit further into some features of common shares. Number one is that there's a par value, okay? And so just like with fixed income, this is a similarity to fixed income, right? So we talk about fixed income, there's usually some sort of par value associated with that fixed income instrument, as opposed to common shares. There's usually no any par value for a common share. Typically we see in Canada this par value usually is $25 per share. Okay, that's the most common attribute we see. This can be obviously changed, but this is the most common type that we see. The second point I have on here, there's typically no maturity date. Okay, so these are referred to as perpetuals, or they go on forever. Now, there's sometimes what we would see as like a soft maturity date kind of classified within some of these preferred shares, where there might be a callable feature or retractable feature within there that may put a soft maturity date on those shares. But typically these are, shares that go on in perpetuity. And sometimes we can kind of think, this is maybe a positive attribute for individuals or companies to issue these, because as opposed to fixed income, there's no real payback of the principal potentially. Now, most do have, like I said, a callable or retractable feature. They will give some sort of soft feature, but usually they're issued with no maturity date. Okay. Second, non-voting. Okay. So preferred shares usually don't come with voting rights. Okay. So as opposed to common shares usually somewhat come with a voting right. Now, we've seen recently some of these voting shares come out as restricted voting shares, etc. But most of the time, common shares do come with some sort of voting right and control. Common shares do not have these voting rights if dividends are paid on schedule. Now, within a lot of contracts in preferred shares, if there's 2 consecutive misses in dividends, then all of a sudden preferred shares may obtain some sort of voting power within that issue. But typically, no voting. The next we'll have here is cumulative, right? So cumulative, this refers to, hey, if dividends are missed, these dividends are going to accumulate in arrears, right? So all of a sudden, hey, you missed a quarter of my dividend payment. Now, this is not just going to disappear. This is going to still have to be paid to me in the future. Okay, and these are going to accumulate, and hopefully as the cash flow starts to be generated within the company, those unpaid dividends, those missed dividend payments are going to be paid again. And preferred dividends arrears here must be paid before common dividends are paid. Right? So if you have a cumulative feature, it's good because all your arrears that you've had in the preferred must be paid before any dividend is paid to common shareholders. Again, it's one of the reasons why we refer to these guys as preferred shares. And the last one, redeemable or callable feature. Okay, so if you're familiar with bonds, a lot of times we see redeemable and callable features associated with bonds. Remember, the callable feature, in this case, the callable is giving the right to the issuer to retire the preferred share. But remember, there's typically no maturity date. Okay, so here a callable feature is going to give the issuer the right to potentially retire this early. And why would they do that? Well, depending upon where interest rates are, if interest rates have fallen considerably, then all of a sudden, the issuer may see it advantageous to be able to call this back and maybe reissue some sort of debt or preferred share at a lower cost. So we're going to see some examples here in the next slide that are going to kind of highlight some of these different features that we see on this slide. So here's some examples of preferred shares. Now, this is a slide. This is a snapshot given by Raymond James. They give out some sort of bi-monthly snapshot of the preferred share market in Canada. So we're going to walk through some of these different features here. So here you can see first what we should look at is the issuer. Okay, so we have 2 different columns here. We have a fixed reset and we have perpetual. Remember, the perpetual is simply something that goes on forever. So there's not going to be any sort of reset of the interest rate, etc. Now, some of these may still have a call feature built in, but there's not going to be any resets. The most common types of preferred shares is we're going to see this fixed reset. And here you can see that we have a variety of different examples of fixed reset preferred shares from Husky, Manulife, Royal Bank, TransCanada, all these different types of preferred shares. We have the different series that they have offered of these preferred shares. And then we have the symbol. The symbol is generally the regular ticker symbol that we see associated with the company, BC. It's going to be BCE. For Royal Bank, it's RY, followed by a period and then a PR that's going to represent this is a preferred share, And the last letter here, this is typically going to be referred to what the series or what the issue type is of the preferred share. The next column here, you're going to see ratings. Okay, so just like bonds, right? So just like bonds, we're going to have ratings of preferred shares. And these ratings are going to be dependent upon the cash flow of the company, the debt load of the company, other typical issues that you may see them rate bonds on. And here, higher is better here. So PFD1 would be the highest rated, all the way down to PFD5, which would be the lowest rated. And so here you can see companies like Royal Bank have a PFD2, all the way to, let's say, an Enbridge, it has a PFD3. Higher, better. Remember, PFD1 to PFD5, that's the rating. And again, these ratings are similar to what we'd see in fixed income instruments. The next column here is the pricing column. Okay, so within this pricing column, we're going to see, remember, we saw in the previous slide, par value. We can see all these preferred shares have a par value of $25. So they were issued at $25. They begin to trade on the market. And remember, their pricing is going to fluctuate a lot with interest rates, the general economic environment, lots of other factors, but they're going to start to trade in the market, and these are traded on the secondary market. So you can go on and buy, and these are going to be traded throughout the day, and their price is going to change throughout the day. And so that's where we see the last pricing structure here. So some of these are trading above par value, some of them are trading below par value, and that's all going to be dependent upon what the dividend yield is on these typical preferred shares and where interest rates have gone, what the reset features are of these preferred shares, and they're going to obviously be determined by supply and demand in the market. The current yield, just like in bonds, the current yield would simply be the dividend amount, right? So we would take this dividend amount of 1.06 divided by the last price, right? So 1.06 divided by 23.79 would give you a current yield of just about 4.5% for this BCE fixed reset. And we can go down and we can see the different yields that are given to preferred shares. The dividends are paid, looks like 4 times a year, right? So May, June, September, December on the end of those days, right? So 4 times a year. These are just correspondent to the months. Okay, so these are just correspondent to the month, and this is the day that is going to be paid. And here in the previous example, we saw a call, right? So what's going to happen? Well, potentially, remember we saw in the previous slide a call on whether it's a bond or a preferred share is going to give the right to the issuer to buy and retire these preferred shares. And the price in which they're going to have the option to do that is going to be the par value. So you can see again, all these prices, the potential price that the company may buy these shares back are $25. And here are the call dates. Okay, so, beginning September 30th, 2018, BCE is going to have the opportunity to go out and retire some of their preferred shares on the symbol here. Now they're going to have to go back and buy this at $25 a share. The YTC is the yield to call. So if BCE decides to go and retire this at $25, the yield to call, so the yield up until September 30th, 2018, that's going to be 10%. Why? Is because this is currently trading at what? Under par value. And also it's probably giving a yield of close to 5%. So with the capital appreciation, you would see plus the dividend yield, your overall yield to that call date would be approximately over 10%. Very good. As opposed to some of these other features down here, you could see that potentially if Royal Bank, their next call date would be August 24th, 2019. Their call price would be $25. Okay. And the yield to call here would be just over 6.6%. And again, we're trading at under par value, and the current yield is 4.10%. But the dividend is what? Much smaller than what we would see compared to the BCE feature, hence the yield to call is going to be a little bit less there. So that's an example of fixed resets, and we're going to see a little bit more about the reset feature here in a second. So let's go to the next slide and look at the reset features of these calls. So these are the same issues that we saw earlier on the previous slide there. So BCE, Royal Bank, all these guys are the same. The symbols are all the same. This is going to refer to what the quarterly income is, okay, of holding these shares. But here, the key thing is the reset features on here. So these were fixed resets, right? We saw that before. Well, what does that mean? Look, these may be reset to the Government of Canada 5-year yield, okay, plus 2.64% on September 30th, 2018. So that's a pretty good feature, because essentially on 2018, whatever the Government of Canada yield in, let's say in next year at this point in time, the Government of Canada yield, let's say, is 2%, okay, plus 2.64%, that is going to equal 4.64% of a reset of what the dividend yield would be for this asset. So this is going to give you some protection potentially to interest rate risk, right? Because these are going to be reset at different times, right, for different assets here. So even if potentially, interest rates have gone up, and you're sitting here with a preferred share that's not giving you the same yield that new issues are giving to investors in the future, all these different fixed reset features here for all these different assets, you're going to begin to see some sort of potential appreciation of your dividend yield, because there's going to be these fixed reset features in here. So that's what we refer to as fixed resets. The last one before we end the video here is I just want to go back to the previous slide, are these perpetuals. Now, these perpetuals are different than the fixed resets. Why are they different? Well, because there's not going to be any reset feature here. These are all the same that we saw, right? This 25% par value here, they're trading at a price. You can see here that the current yield is much higher than what the current yield would be for most comparable fixed resets. Well, why is that? Because there's no fixed reset date there, right? There's not going to be this fixed reset date in 5 years. It's not going to be the 10-year Government of Canada bond plus some percentage. This is going to be forever, right? The perpetual. So a lot of these features are the same, but when we go down here, you can see there's no reset feature here. There's this call options, right? So these are just call options for the firm to potentially call and retire these back. There's no reset feature here, so you're taking on a little bit more risk with the perpetuals. If you buy those and you hold those for some time, there's not going to be the same amount of interest rate protection you would get with a fixed reset. So that's a quick rundown of some of the features of preferred shares. I hope that helped you a little bit in terms of understanding what preferred shares are, what some of the different features are within preferred shares. If you do have any comments, suggestions, you can leave them in the comment box below. If you like the video, give a thumbs up. And just to finish with, there's lots of other types of preferred shares and more features. So this should just be kind of an introductory for you guys in terms of preferred shares. And if you do have any questions, comments, or if you want other videos on preferred shares, please leave them in the comment box. Thanks for watching.